Hey, good morning, everyone. Morning. It is the last trading day of May. It's the last day of May. It's May 31st, 2023. Where did this time fly? We're already through 5 months out of the year. And in today's update, we're going to be talking about a few things in relation to the China US kind of tensions that have been rising. We're going to be talking about the overall trading plan for the day when it comes to the S&P 100 futures. And I do want to start off by saying that today, May 31st, Wednesday at 2 p.m. Eastern Time, we are going live with the first day of our workshop. The workshop is a free futures course to break down how you can trade any market condition realistically with a few simple tools, right? I've put in a lot of years studying different market tools realistically, going through indicators, all that stuff. And at the end of the day, I found out that no real indicator is anything of use realistically when trading the futures market. We want to get down to the bare bones. So through a lot of research with the help of a lot of desk traders, professional traders, I've learned a more systematic approach to trading the futures market that I do want to share with you guys. And if you are avid listeners at Trade Pro Academy, you'll know what they probably are. And we're going to be focusing a lot on volume and order flow. So I hope to see you guys there. We'll start that up at 2 p.m. Eastern time. And let's get right into the breakdown and some of the news today. So the two worlds, the two biggest economies in the world, two largest economies in the world, have increasingly moved farther apart and increased tensions between one another. And the fallout, the fear of a fallout, is making some companies think of changes, relocating business operations to more friendlier regions, while others are doubling down on their lobbying efforts to make sure that they are not harmed. So, Tesla is one of those firms navigating tricky waters. And the latest has even prompted Elon Musk's first visit to the country since a launch of the launch ceremony of the Giga Shanghai factory in January 2020. And again, he that was quite some time ago, about 3 years ago now. So China represents Tesla's largest market outside of the U.S., about 20%, just over 20% of its revenue, and it's critical in terms of the EV maker supply chain, accounting for more than half the global output. Things like export controls, data security, and restrictions on sensitive technologies can also impact the company's bottom line and future market share. So Tesla was previously banned from Chinese military complexes and housing compounds in early 2021, and that expanded into 2022. While a lot of assurance will have to be made with regard to the driving information that's collected by cameras built into the vehicles. So, Foreign Minister Xi Gang, I believe it is, um, he was Musk was quoted saying to him, right? This was a conversation between the two. The interests of the United States and China are intertwined, like conjoined twins who are inseparable from each other. So he also met with China's commerce and industry ministers and dined with Zheng Yukun, I think, chairman of the top battery supplier at CATL. So Tesla's shares rallied 4% on Tuesday, over 4% on Tuesday after Elon touched down in China and Beijing, pushing the stock over $200 for the first time since March. But we saw some of the downside pressure come in with the overall market slumping into the end of the day. So Tesla still faces some stiff competition from rivals like BYD in China, as well as soaring rates on auto loans and EV price wars all over. Realistically, remember, chips are getting more expensive as well. So, Tesla's strategy in China is critical for the success in the near term, but Musk does have a lot on his plate with the work at SpaceX and recently acquired Twitter, who he kind of pushed over the CEO role to someone else. And in fact, Fidelity Investments, which helped finance his $44 billion takeover of the social media platform, said Twitter is now worth just one third of what he paid after it marked down the value of its equity stake. So France has also threatened to ban Twitter across the EU if it doesn't follow the incoming European Digital Service Act, which goes into effect at the end of August. So we'll see how that kind of shapes up. Now, to talk more about China, right? Joining the business executive tour in China, JP Morgan CEO Jamie Dimon had his own comments to say about the relationship between the country as well as company policy going forward. We tend not to leave unless there is war or civil war, and we're not predicting any of that there. There's always going to be risk, he told Bloomberg at the bank's annual global summit, China summit in Shanghai. Obviously, it's been a far more complex situation. National security will trump all other issues. Over time, there will be less trade in China, but it'll take years for that to take into place. And this is not decoupling. This is just de-risking. The world's changed a little bit. That's what Jamie Dimon said. So the tensions are fairly they've been going steady for a while right now. We've seen a lot of impacts on the business from that. Talking about the debt ceiling, we can talk a little more about tech, right? A lot of people thinking that tech is in a hype bubble situation where AI is um, really really pressing the upside in a lot of equities and expanding their actual value without really providing anything new just yet. So we'll see. We had a little downturn in tech. That's what I was talking about yesterday. Like triple Qs failed off a very, very key level, and we pulled down slightly to start the week, I should say. And I think there could be a little more downside before we find some strong-handed buyers. But talking about the debt ceiling, treasury yields, they do continue to fall. That's why I was looking at long bonds for the next few weeks, as we can expect some treasury yields to drop as a debt ceiling continues to advance on Capitol Hill, with a default nearly off of the cards. So the yield on the 10-year, right, US 10Y dropped 13 basis points yesterday to end the session at about 3.69% and slipped another 4 bips overnight. Legislation to lift the current $31.4 trillion debt limit into 2025 and cap federal spending cleared the House Rules Committee last night by a 7-6 margin, sending it to the full House for debate, and is expected to vote on passage on Wednesday. And we are going to make sure that the votes are there, joining with our Republican colleagues to get over this bill and through to the finish line. House Minority Leader Hakeem Jeffries declared it will also avoid the country being in a hostage taking situation for the rest of this Congress. So they are moving forward pretty well, right? That's pretty much what everyone wanted to see to kind of subdue some of those fears. Not that the market was reacting any poorly to it, but again, the real vote we're going to see, we're going to get a solidified response and answer come June 5th. This is Monday, and we're going to see how that kind of shapes up. Talking about the trade plan and the markets for the S&P 500 futures today, we slumped yesterday through some key levels that I was talking about, through that low 20, through that 32, which was the first area of support, holding for about 6-7 points. Right now, we are through the 4,200 under some of the key areas, slumping through a distribution block, trying to trade the bottom edge of that distribution block. So the way I see it is there's some overhead volume and resistance. If sellers manage to reoffer into the 4,200, the 4,198s, or the 4,208, 4,210, those are the two key areas where the sellers do have to show up to really slam this back down, so we can see some strong-handed buyers in some distribution blocks that sit somewhere around 4172 to 4180, right? That 8-point area. I do want to see if we can go and test that region to find some strong-handed buyers, a higher low, and then potentially send this higher. Yesterday was the first day in quite some time that we've seen a strong offer throughout the majority of the day, as we noted in our trading room, and had a pretty solid day overall. Tech has been lagging as well. It's slumping down. So if tech continues its descend, which I think that it has the potential to start this week a little weaker before we can potentially rally with non-farms and into the end of the week. So I do want to see a drop in the equity market so some strong-handed buyers can come out. And let's see a pop and drop realistically today. That's what I want to lean towards. A little rally off the morning session, then look for some sell side later in the morning and early afternoon. That would be the ideal scenario, right? Based on the volume and order flow that came in yesterday. So that's mainly what I got for you guys today. Remember, today, 2 p.m. Eastern time, join me for day one of our futures trading workshop, our free futures trading course. It will be recorded, but I really want you guys to join me live because there are going to be some interesting things that I'm going to talk about there. You can ask me questions and I will give answers in a live environment. So let's see how this shapes up today. Hope everyone has an amazing day and take care, everyone. We'll do this again tomorrow. Enjoy and have a good day.